Diane, let me get from you, what does it mean that unemployment will go down to 3.5% in 2019-2020 without triggering that pickup in inflation that everyone's been looking for?
Well, I think what's really important here is that we haven't seen the wage acceleration that we thought we'd see. I do think they might be undershooting on their own inflation forecast. That said, the 3.5% is not, the former 3.5% we saw. In fact, the last time we saw it, I think, was 1969. And that was during the height of the Vietnam War spend. And we saw inflation picking up quite rapidly then. But that was also a very, very different time. If you look back at sort of comparing these unemployment rates, it's just not the same. The prime age participation in the labor force is not what it once was. And even places where people saw this was such a perfect unemployment rate the last time, it's, the sequels, it's like a movie blockbuster. The sequel's not as good as the first one. I just saw Solo, so I know. That's the 10th one in the Star Wars trilogy, the Star Wars franchise. But I think it's really important to understand that the Fed's acknowledging that some of the reduction in unemployment we're seeing is also because of retirements, and we can tolerate lower unemployment, and we're not getting that movement in wages that we'd like to see, the wage push inflation, although today's PPI data certainly suggests pipeline inflation is there, some tariffs. Also, I think it's important the 4 rate hikes, pulling ahead rate hikes, and getting into that contractionary territory, moving that up to 2019 and only 1 rate hike in 2020. I think we're in for a growth recession in 2020 at the very least.
All right. Well, I just want to make a quick mention here that we're looking at the dollar move higher. The Bloomberg Dollar Index is now positive, shooting up after we saw this Fed statement. Tom?
That's where I wanted to go, Diane Swonk. The litmus paper of the global system is currency, and currency means U.S. dollar. Does the set of announcements today give us a new dollar rally, new dollar strength?
Well, that is one of the issues that's interesting out there, because the dollar rally doesn't mean much if we get something like tariffs on vehicles, 25% tariffs on vehicles. It just offsets any kind of dampening effect the dollar has on inflation in the U.S. So that's a bit of an issue to think about going forward. The other issue is the strain that the strong dollar is placing on emerging markets. I think Mike made an allusion to that earlier, and on other markets like Italy. So I think we really have to be a little bit careful about how fast that dollar goes up, because it does look like we're in a rally mode. Of course, we're going to hear from the ECB as well.
Yes.
And I think hopefully we'll hear that they're getting ready to, a little more ready to get to that tapering point and to pull back on their bond purchases, even though they have more aggressively to not be purchasing as much.